A little bit about the how. Today is all about trying to uncover it and make it as easy as possible for you to get started. And the next session is about digital assets. Yesterday we spoke an awful lot about where the market's going. We're going to look at that acceleration, but on the panel today we've got a panel that's incredibly experienced in this space, and they're going to be telling you what they've learned along the way. So leading the panel is a great colleague of mine, Igor, and Igor Mikolov is based right here in Amsterdam. He's a partner that's focused on everything about innovation and emerging technologies and has worked with some of the largest institutions in the world on topics like tokenization, digital assets, business model innovation. And business model innovation is an important thing to go hand in hand with all of these tech transformations as we talk about it. So I'm going to hand over to Igor, who has brought together just a fantastic panel for you. So do enjoy. Igor, over to you.
Hey, thanks, Claire, and good to be here. Hi, everybody. My name is Igor Mikolov, as Claire said, partner with UI Parthenon. You can think about UI Parthenon as a bit of a strategy arm of UI, focused for quite a bit of years on CBDCs, commercial bank tokenized deposits, decentralized strategies, and all things crypto. So with me today you have Joris Dekker. Please introduce yourself, Joris.
I work at ABN AMRO and I represent ABN AMRO for the digital euro and all forms of digital money that are happening right now.
Floris from ING.
Yeah, good afternoon. Floris Lucht from ING, responsible for the digital asset strategy within ING Wholesale Banking.
Thank you. Ria from the Dutch Central Bank.
Yes, good afternoon. My name is Ria Roering from the Dutch Central Bank. I work in retail payments and especially in the project Digital Euro.
Excellent. And lastly, Christoph from Union Investment.
Igor, many thanks for having me here this afternoon. Christoph Hock is my name. I'm heading tokenization and digital assets at Union Investment. We are a Germany-based asset manager, and for us, obviously, assets on chain and also cash on chain to serve our clients in the very best ways on our focus.
Excellent. Well, great to have all of you here, and let's dive right into the topic. Also, hopefully we will get questions from the audience at some point. So audience, please do ask your questions. Well, when we talk about digital assets, many people think about different things. So for some it's pure crypto, for some it's the ever elusive CBDCs like digital euro, right? And it seems like there is a bit of an overlap in how central bank and commercial institutions look at the world of digital assets. So maybe to start a bit of a top-down, let's ask Ria, what is the world of digital assets for you as a central bank?
If you ask me, is the digital euro a Bitcoin issued by a central bank, I would say no.
Right.
No. So maybe it's good to start with some of the objectives of the digital euro. So why do we want this? Because we already have a lot of digital money. And the main reason is strategic autonomy and monetary sovereignty. So we could elaborate on these points later, but digital euro is like digital cash.
Yeah, excellent. So strategic autonomy and monetary sovereignty. All right, so this is how we have evolved our thinking on CBDC in Europe. Right, and everything I think started from a few years in the past when projects like Facebook, Libra shook the space of digital assets, and people started thinking, hey, if we as government or we as big commercial banks are not acting, well, big tech will act first. And ever since we have this promise of digital euro, ever since we have the promise of what commercial banks can do by plugging their efforts in the ecosystem of digital euro. So let's explore that a little bit. And with that in mind, question to Floris. So Floris, I heard that you guys are exploring your own path towards what could be digital euro or what could fulfill the promise of digital euro. You're not waiting, you're on the way to think about which assets will be most useful in the market, and then you're working on it. So could you share your journey there so far?
Yeah, so several years ago in ING we developed a digital asset strategy. So what we considered then, ING had been involved in various blockchain initiatives for about 8 years ago that we started. And that was more in the form of experimentation and participating in multiple initiatives to see what would work and what would not work. Then when we developed the digital asset strategy, we wanted to be more structural because we saw that the developments were there, the potential was there definitely, but they were not moving as quickly as we thought they needed to. And we saw that was because there needs to be market consensus about infrastructure. And so that, for example, is about the settlement layer. So in essence, what blockchain networks will be used by market participants to avoid market fragmentation and to ensure it's trusted. And also the settlement instrument, the payment instrument. And there is no consensus about that yet, I think, what kind of instrument that will be. So we identified essentially 4 means of digital payments. So one is indeed the digital euro. But we wanted to focus for a digital asset strategy on really on-chain use cases. And the digital euro in the current plans, right, for the foreseeable future, is not on-chain. So that for those particular use cases, it's not a solution. Then another instrument that the Eurosystem is developing or exploring is also CBDC in euro, which we do find very promising, definitely. I mean, we want to support. At the same time, that's an interbank instrument. So for B2B, B2C, and retail use cases, you cannot use it most likely. So then what instrument can you use for digital payments for B2B, B2C? That's 2, essentially. It's on the one hand tokenized deposits and on the other hand stablecoins. And tokenized deposits we see as something that is highly promising. That can be definitely a solution for the long term. So essentially, just to explain what it is, it's just your regular deposits that everybody has with their bank.
Yeah.
Except when you do a transaction, it's tokenized, so it's put on chain, so you can do the transaction on chain and settle tokenized assets. That's a very good solution. However, that means that if ING issues its own tokenized deposit, and for example ABN AMRO issues its own tokenized deposit, and other banks do as well, they need to become interchangeable, and you need to settle them as well. That's all possible, but it takes quite a lot of time for banks to agree on the standards there and to also integrate that into their payment applications. So we support that and we want to promote that, but it will take 5, 6, 7 years before that will be developed, we believe. The instrument that is already out there right now is stablecoins. Right, those are already being used, predominantly, of course, for crypto trading markets, but as settlement instrument as for other blockchain use cases, they can be definitely used as well, and they can be developed fairly easily, as we've seen, because they exist. So what we've set out and what we are exploring is if we can issue a stablecoin as well, but then not on individual bank basis, but with a consortium of banks. And whether that is feasible and whether we will do that is to be seen. But that's a path we think can be very beneficial, not for all use cases, but one that we can start with and discover the market and serve our clients initially that way.
Excellent, excellent. Well, Floris, looks like you have been through quite a journey as you went through a few types of digital asset classes, and you've zoomed into the stablecoin as the primary first opportunity to tackle. But what I'm wondering about is, let's say we have stablecoin-based payments, and they are on chain, so eventually you might not need anymore the traditional payment rails because people can start, and companies as well, transacting peer-to-peer. So what would happen, and maybe Joris, this is where you come in, because I know that ABN AMRO is looking at potential ways to rethink how banks would operate once payments would start being peer-to-peer and fully on-chain, and assets like stablecoins become possible to transact and hold in your self-custody wallets. So what could be the role of banks, and how are you exploring this as things move more on-chain and as payments become more and more on-chain as well?
So our journey is similar but different as well. I have a liquidity background, so I used to be manager of cash and liquidity management. And there we have intraday liquidity. It's very complicated to reconcile all the ledgers.
Right.
So you have to do an intraday reconciliation between your own ledger and the ledger of other banks, and you have around 800 other banks that you have a Nostro relationship made to make the payments, and you have to do all of that in a system. There's a lot of data involved. And then when I was thinking then that could be a smarter way if we do that on one central ledger. And then I moved to market infrastructures for resolution, where we had to describe how the financial market infrastructures are working now. And I had to write down how, for instance, card payment or security settlement is done on current financial market infrastructures. It's exactly what Peter from the European Commission said yesterday. You wouldn't make it up if you started over again. So we need to do it better, and we need to do it more efficient. And the traditional banking payments market is really under pressure. You have digital euro coming, you have big tech coming, you have crypto coming. So we need to do something. And the main thing we need to do is reduce our costs. In the Netherlands, traditional transaction banking costs around 800 million a year. So if we can reduce the cost, only then we can compete with the new technology that's coming and new parties that are entering the market. And we do that by exploring how we can reduce the compliance costs. So we explore how we can do KYC and transaction monitoring on chain. It seems to be much more promising than conventional ways. And we need to have hands-on experience. So we don't go for the presentations or the books or thinking about we want to have actual experience with a community we are building, with universities and yourselves part of it, and really learn by doing how we can deploy blockchain.
Yeah, excellent. Well, it's really good to see that ABN is so much in exploring the public permissionless space. This is really promising and shows quite a turnaround from a few years ago where things were predominantly private and permissioned.
Yeah,
But let's dig into that in a little moment. I see that, Ria, you want to fill in on that.
Yes, maybe it's good to add. I'm very happy to hear all those innovations and the journeys. So I work on the digital euro, which is a retail CBDC. But it's good to mention that my colleagues are working on wholesale CBDC solutions, and the euro system has really stepped up its game. And is now entering into a two-track approach. And the first is to make use cases such as you mentioned, interoperable with the Target 2, the settlement system.
Yes.
And on the longer term, to really to look into possibilities of integrating it into the central bank settlement system.
Yeah. Honestly, my personal belief is that CBDC or digital euro should not be a top-down deployment, but it should be an integration of what commercial players can provide to strengthen and innovate the infrastructure. Right, but this is my personal opinion, and I'm sure you all have yours. And with that, to Christoph. So Christoph, I know that for your fund and overall the constellation of companies around yourselves, you're working at different types of digital assets, and some of them have already traction in the market. So could you share your perspectives on what gains traction and why?
Yeah, more than happy to do so, Igor. I guess to start with, we are an asset manager, and our role is to deliver best-in-class service to our investors. And that's why, clearly for us, the focus is also on blockchain technology as an enabler for servicing our clients in the future in an even better way. So it's not technology for the sake of technology because it's cool, because it's a hip topic right now, but there's really the very best client interest in the focus from our side. And in today's financial world, from our perspective, regardless whether you look at assets on chain or whether you look at cash on chain, both are equally as important to further evolve token economy. Looking at these two types, it's about improving existing services. So in today's financial industry, I guess it's fair to say a number of pain points we could sort out, looking at speed, especially when it comes to settlement of transactions. So here in Europe, we are talking at the moment about shifting from T+2 settlement to T+1 settlement in November 27. That's a step which already the US went to last year. Looking at tokenization, and that's why we need both assets and cash on chain. We can get to T0, we can get to atomic settlement at one stage. Then also looking from a risk perspective, having shorter settlement cycles, obviously additional risk is taken out of the market, and when having a scaling of assets on chain, we will also talk about cost reductions. So that's in a nutshell big benefits we see when going the route to digital assets. On top, it's also important to highlight we are not only talking about tokenization of traditional financial instruments like fund shares, like bonds, like equities, but looking at the nature of a token, fractionalization is a key topic. So we could come with new offerings, especially to our retail investors in some products, especially in the illiquid space. Nowadays, you have minimum investments of 250,000 euros, 500,000 euros, and with the fractionalization, you could also make products like real estate, like infrastructure, like alternative assets accessible in a very direct way with small amounts to be invested to retail investors. So therefore, efficiency gains on the one hand, which we will also pass on to our investors, and on the other hand, it's a widening of the investable universe we are talking about. And as mentioned before, to realize all these benefits, it's essential that we do not have only the asset side on blockchain, but I fully support what my other panelists were saying. We need also cash on chain. And from our perspective, three kind of solutions for the wholesale area. I'm not talking about retail. Retail business. For us important to settle our transaction is the wholesale part. So we could make use of obviously wholesale CBDC. And that's why we are very big advocate and supporter of the ECB's approach, coming with this two-stage approach now on supporting existing Target 2 systems with blockchain technology, and then potentially also going the way into a fully tokenized world. We are keen to wait whether we might see an implementation already late 25 or whether we will have it in 26. Then commercial bank money token in combination with stablecoin could be another solution. Stablecoin from a wholesale perspective, I see, to be fair, as a niche product, because looking at today's volume in Europe, we settle on as an industry, we settle on a daily basis about 80 billion euros in cash equities. We have about 150 billion in fixed income. Do I see this kind of notional managed by stablecoins? Clear answer is no, and that's why I think for the professional financial players like us in the market, CBDC is central bank digital currency is really the way to go to. On the other hand, competition fosters innovation. That's why I think we should have the entire box of instruments in parallel to make sure that the very best solution then finally grab some biggest market share.
Question, so are we going to see on Uniswap shares of your fund in a tokenized form anywhere soon?
Anywhere soon? I highly doubt it, to be frank. I guess the the first step is to go via CEXs, so central exchanges, not decentral exchanges. You mentioned beforehand, Igor, we've had a number of use cases in the past on especially on tokenized bonds. And first transactions we did in this space, it was back in 21, a transaction with the EIB as an issuer. Settlement was in a traditional way via fiat money. The next iteration we went to was investing into tokenized bonds, where we also supported trading functions, and in a first step, I believe we will see OTC trading for tokenized bonds. Then a next step will be, we have the DLT pilot regime here in continental Europe. We have the digital security sandbox in the UK. So as a next iteration step, I would see to have these type of instruments traded on DLT MTFs. So that's labeled under CEX, and then DEXs, digital exchanges. That's then in the DeFi universe the next step to go to. But that's what I don't see in the near future.
I get it. Well, let's explore it a little bit, because it's I think way too easy to say, well, blockchain delivers savings because, well, of potential redundancies in the way it's built, and, well, settlement that can be instant potentially, but, well, also it is not instant now because people are doing real things in between, right? So settlement is not instant for a reason, right? It's not because technology doesn't exist to make it instant. So there is always this component of permissionlessness that is making real life Web3 world successful. Right, so without permissionlessness, it's really hard to imagine how this sort of technology would exist and thrive. So I understand that all of you believe in potential savings and efficiency gains. Okay, very good. But do you also believe in the potential of permissionlessness? And if yes, how?
Well, we should open up the decentralized ecosystem to the traditional finance world. So we have to come together. It shouldn't be
we have
worlds.
To come together, yes.
So the best way to do that is to have traditional finance on public blockchain and really use the infrastructure that's out there, because it's mature enough to use for us as banks. It's there, it's good. Why don't we use it? But we need to have some elements to be on there as traditional finance. We need to have a settlement layer that's real money. And we have that with the wholesale CBDC coming. And we need to ensure privacy when needed. But not only privacy like the European Central Bank is doing for digital euro, because we want to make a transaction private. But not allow criminals to do everything they want.
That's right.
So we have to find a balance between privacy and compliancy. And we have to find a balance between traditional finance and decentralized finance. But we should not recreate our current worlds.
Yeah.
So there is no need for a centralized institution. It should be decentralized. And the role of banks will change then. And we need to explore how that will look like.
100%. And it takes courage to move into the decentralized, permissionless world and not ignore it, right? Because some of the projects have chosen to say, hey, well, the value of permissionlessness probably is, let's just put it under the rug and focus on things that are obvious in the traditional world of finance. So it's really interesting to see how ABN AMRO is looking at the potential of permissionlessness. Yeah, Floris, anything you would like to say in that?
Yeah, I think permissionless is the future. So in the end, that's the only way, I think, to create network effects and to apply blockchain technology at scale. The question is how to get there, right? That's the difficulty, and that's one of the issues we've been talking for a very long time already about the benefits of blockchain and how to move there from financial market infrastructure perspective. I think everyone that's a bit involved is convinced about the benefits in terms of what you mentioned, efficiency, costs, transparency, etc. But how to get there? Because you have something that works already, and then you want to replace it by something new.
Yes.
And that involves many, many stakeholders. That's the bank, other financial institutions, that's regulators, that's all the various clients. And they need to be sure that their money is safe. That's a bit, from a bank perspective, the biggest issue, right? And therefore, I can imagine that in the end, the institutions involved are more comfortable to start with permissioned networks, and then over time, move that and change toward permissionless.
Yes.
There should be a mechanism found, of course, to do that, but there are ways to do that, to get there. But still, it's a huge challenge. So I think, for example, of capital markets, it's very clear the business case that is there. But even if this perfect settlement layer is there, so even permissionless or permissioned, irrespective of what solution you choose, it's very, very difficult to make that step for the whole ecosystem, the whole market, to change from one infrastructure to the other. So somehow it needs to be step by step, but on the other hand, if you do it step by step, you have twice the costs. So then you don't have the savings, right? And you have a fractured infrastructure.
Correct.
So you need to find a way to bring everybody along, and that I'm afraid is more difficult to do with permissionless blockchains. But I think inevitably that's where we will be heading to over time.
Thanks, Floris. Yeah, I'm especially interested in central bank's perspective on permissionless, because it is something that potentially puts the entire model upside down. But permissionless doesn't mean lawless. Permissionless doesn't mean wrong treatment or treatment of people in a way that we forget about their fundamental rights. So how can a central bank look into the potential of permissionless technologies and see it as means to bolster innovation, bolster advantage in terms of European participation in other regions' financial infrastructure, right? How can inclusion through permissionless technology become something that on the level of a central bank is seen as an advantage as opposed to a disadvantage? Do you have thoughts on this area?
Yeah, well, I have to admit I'm not an expert on this, but I think from a central banker's perspective, permissionless is a difficult issue. For us, it's important that there is convertibility at par between public and private money. And why do we think that public money is important? Because of the anchoring. This will make the whole system more safe and secure. So
what is anchoring?
I think Joris mentioned that the difficulties for a consumer or business doesn't know the creditworthiness of a financial institution, but since they are all linked, they're all together in central bank money. They settle in central bank money and have the central bank reserves. That's the anchoring. The anchoring of fiat of public money.
Yeah. Yeah. Well, I would think that one of the potential futures can be that once issued by commercial banks, say stable coins and tokenized deposits become a real thing, you could work with commercial banks to say, hey, we're going to be using similar or the same rails, but legal tender will be what's backing up those assets, as opposed to having them backed up by money that's in a safe or on a bank that is in turn backed up by legal tender.
Yeah,
So
but the only money currency who can be legal tender is public money.
True.
So is a digital euro either retail CBDC or retail CBDC?
Yeah. We'll see about that, because now it's a combination of private money and public money, and it looks like this way ecosystem is working. So I think if it was only one part.
Oh no, I fully agree with that. So it should be both. So it should be public-private. It's not the aim of the Eurosystem or the ECB to have only public money. That would be disastrous, because we need the private sector for innovations. That's a sure thing.
Surely.
And that's why I am hesitant about stablecoins in Europe, because now we have fractional reserve banking. So a bank has like for the Basel requirements of say 10% capital at the central bank, and we can issue a lot of debt with that. We have a multiplier to really make a lot of loans, which is good for the economy. And if you go to stablecoin, you have to have 100% collateralized, and then it's money. And as a bank, that doesn't really make sense because you want to make as much money out there as possible. So that's why we need a two-way system. And the central bank plays its part and the banks play its part.
Yeah, but I'm wondering if the complexity or let's say choice should be forwarded to the end users, because right now it's actually not very often that people understand that the only public money that you typically have is cash in your pocket, right? And everything else digital is something else. So do you believe in the future people still should have a choice? Like in China, they have, CBDCs that, you can buy, you can get it on your special wallet. You can get digital yuan separate from commercial bank brought yuan. So should we have a similar approach or should we have a unified approach?
Well, Malay, if you look a little bit back in history, because now it looks like money and you make payments with is money that you use in a bank or cash. If you look back a little bit more, then it was central bank money that we used. All there was cash. And the whole banks have been expanding a lot in an area that everybody just money is what you have in banks. Yeah. But I think we don't have to have real money. So, but it has to be real money. So we have to be able to trust the money, so not the Rabobank money, ING money or ABN AMRO money. Yeah. It has to be real money, so it has to be connected to the central bank. But it also has to be safe. The money is really safe with the central bank, and banks are allowed to take risk with money. That's really the difference. And if you take out the risk, then you take out the benefits as well.
Yeah, you take out the upside as well, for sure. Yeah. Well, on that one, let's quickly pivot to questions from people online. And I think first question is, Christoph, for you. Mm-hmm. It's a little bit hard to understand what exactly was asked here, but I would translate it into the following. In this case, it's real-world assets is something that is interesting for the end users, and it looks like nowadays people are interested in the real-world assets. Would you, as a fund, consider tokenizing them and bringing them on chain? Mm-hmm. Would you build a fund like this? Would you tokenize them? And maybe the next question is, if yes, would you think about public permissionless space as means to distribute those real-world assets? How do you think about that?
So maybe many thanks, Igor, for the question. Maybe starting with where you finished with the discussion permissionless versus permissioned public versus private blockchain. I guess at the moment the financial industry is characterized in a way that we have pretty much central structures, and within these central structures we have a number of oligopolies, and oligopolies, as we know, come for the end user at higher cost than when having a highly competitive world. And therefore, looking at the debate permissionless versus permissioned, do we want to end up in a fully permissioned world where we have a kind of copy-paste of today's infrastructure, just same structure, but only based on a new technology? Would we be able to deliver all the benefits we assume blockchain technology can deliver to our end investors? And the clear answer is no. So that's why in a very big picture, I think going into a permissionless, going into a public blockchain world makes sense to think about. Nevertheless, it's equally important when being on this journey that we take financial stability, that we take consumer protection also into account. And that's why I guess it was you, Floris, mentioning it. Starting the evolutionary journey with a private blockchain, but already with a focus on public chain makes absolutely sense. And typically, when talking to regulators, there are discussions about who's validating the nodes, where do these guys sit, what is about 51% attack, how does the governance of blockchain looks like. These are all embedded with blockchain technology, new types of risk. We have to assure that we have all the answers for, and so that's why I have some understanding that regulators have a more cautious view than market practitioners. Nevertheless, we are talking about Basel III at the moment. SCO 60, will it get in place? Yes, no. And we would have, with Basel coming into account in Gen 26, we would have extremely high prohibitive charges also for tokenization of traditional assets. For example, when tokenizing a bond, there would be a 1250% capital charge for banks having this tokenized bond, regardless whether it's in their trading book or in their treasury. And that's definitely not helpful for further evolving tokenization of our industry. And I'm sure Trump in the Americas, he will not care about private chains. He will not care about bringing STO 60 in place. And we would have, from a European perspective, then clearly not an equal level playing field in further evolving blockchain technology when the Americans don't have these prohibitive charges by not bringing Basel III in this blockchain context in life, and here in Europe we do so. And
you say 1200%.
1250%.
What's the
so it's literally it's you would need to have twice the capital when having a tokenized bond on your book. So having 100 euros of a tokenized bond on your book, this would mean 8 times 12.5% that you also need an additional 100% capital for this.
What's the reason, as you understand?
Product. Originally, the idea came from having Bitcoin and Co. in bank books, but then it was expanded also to traditional financial instruments on a that's only applicable, by the way, for permissionless chains, not so for permission chains, also for private chains, and it's an instrument in a first step to go on private chains, but to avoid public chains for the reasons given. And I guess here in Europe we have a fantastic regulatory setup, and typically comparing Europe and the Americas in a number of tech topics, we are behind the Americans, and in blockchain technology, we as Europe, from my personal perspective, we are leading as of now. But this having a non-equal level playing field with the Americans from a reg perspective would obviously be a harm. So that's to your question: public versus private, permissionless versus permissioned. Coming to the question, when looking at digital assets, we briefly touched it before. On the one hand, it's about tokenization of traditional assets. We all of us, we've had a significant journey in the bond space, tokenization of bonds, equities. I guess we have highly efficient markets. This might follow at a later stage. We as Union Investment, like the asset management industry, we are not only looking at our role as an investor. So which products is it we invest in, but we also have the role of an issuer. So we have at Union about 1,300 funds we issue, and obviously we can also imagine that in the medium to long-term future we tokenize our fund shares we issue to our end investors. And one of the products we are looking at the moment is a tokenized money market fund. Stable coins, from our perspective, have also for retail investors the kind of disadvantage that they are non-yield bearing. That's as it's defined under MiCA, which is the European law for e-money tokens for stable coins. And when having in the future atomic settlement, so instantaneous settlement and 24/7 trading, I think the more interesting product for retail investors, also for institutional treasuries, is a tokenized money market fund, where you have a yield carrying instrument, you don't have counterparty risk, and you have immediate accessibility. So therefore, a stablecoin is something which we will have in the very near future. We already have the first licenses out under MiCA for some issuers, and more will follow. But in the future, when having the full benefits of blockchain technology, I think tokenized money market fund could be the go-to instrument for a number of investors.
Excellent, excellent. Thanks, Christoph. Well, since we have just over 14 minutes, a little bit left, I think our viewers would really enjoy talking about what we touched briefly on, which is strategic autonomy and European advantage, and what can we as commercial players and central bank do to play that game in a way that it's right, and what is that game for Europe. So in the future, when public permissionless chains level the playing field between the countries potentially, how can we achieve strategic autonomy? Or what would innovation, European innovation, mean for you in that future? Right? Because you could in the traditional world say, hey, strategic autonomy means that we have our own networks for payments, we have our own networks for settlement, we are all clear, and if something happens, we're still within our boundaries, competitive and clear, everything is working. But in the world when we are competing on a global scale, on global public permissionless chains, it's not that easy, right? And if our assets are published there, what does it mean for our strategic autonomy and innovation, especially if you want to compete? Anybody wants to take this?
You want, there's a lot of discussion now in Europe going on and how to achieve that strategic autonomy, and digital euro is one way of doing it, because then we are really, we have sovereignty because it's European instrument, European money. But another way would be to do it on a really decentralized approach. So how do we create autonomy with decentralization? I think that's the promise of blockchain, and it's the promise of DLT. But we have to find a way that does not the US administration can impact that blockchain. So it needs to be really decentralized. We need to have a good discussion with universities in the market in how to achieve sovereignty with the decentralization. And then I mean not looking at borders, so not looking at in Europe there are also a lot of administrations that are going the wrong way. So we have to get a network or community that's on there and it can be autonomous and not be impacted by a bad actor.
Yeah. So autonomy on the level of a country or jurisdiction like Europe is surely different from autonomy on the level of one specific state that can dictate their own rules, etc. So still, how do we make sure that this autonomy is something that is sufficiently achieved? Or maybe is autonomy on public permissionless going to just mean that we ensure that it's a level playing field, everybody's treated the same, and it's the base layer that can serve the needs of all without exclusion? Is this enough? Or is this not enough and we should avoid that playing field that includes other players? Yeah.
Igor, can I take one step back?
Sure.
When I talk about strategic autonomy and we look at the daily retail payments, we see one thing, and that is that we are highly dependent in Europe on European actors, on European companies, on US companies.
Yes, we are.
And this makes us very vulnerable. So at the point of sale in the physical shop, we all pay with our cards, and these are from the international card schemes. So it starts with having a European solution, whether that be private or public, to make retail payments possible in the whole euro area. This is currently not the case, and with the new administration in the U.S. and the threats of sanctions, we don't have, so to speak, the cards right now. To echo something what was said in the Oval Office, so we need a European solution.
So basically, strategic autonomy means not being at the mercy of, in this case, American players that can pull the plug.
Yeah.
But it doesn't necessarily mean always having our own solution for everything.
No, and I think there should also be choice, of course. I think the international card schemes are actually doing a great job, and I think they want to deliver their services also in cooperation with the banks. But what happens if the president has an executive order which demands that they can no longer do business? So
yeah, but if a card scheme was decentralized and permissionless, and we as Europe had a stake in it, and we were able to control it without having the other party fully dictate that it shuts down or acts in their interest, that might be a solution. So
I think it's important what Ria was saying. We need a strong Europe, so we clearly need a European answer, but this doesn't mean that we want to isolate ourselves in Europe. I guess to further build token economy, it's important that the Americans that they play a key role. It's important that the Europeans play a key role, and also the Asian ones. And therefore, it's quite good that the Americans are looking at digital assets, looking at crypto, that they woke up from their 5-year sleep under Biden and SEC's Gensler, and that they are much more open now on digital assets and on crypto assets, because here in Europe alone, we couldn't further evolve the entire ecosystem without the Americans, which play in global markets a key role. But on the other hand, and I guess that's also, Ria, what your ECB's Mr. Cipione was underlining, we need a digital capital markets union, and we need all stakeholders, we need to work on it, and therefore I guess going forward, collaboration is really key to get to our targets where end investors at the end will significantly benefit. So it doesn't make any sense if sell-side firms like ABN and ING, they work on their single solutions, that we in the asset management industry, we work on single solutions, that the ECB is building something, or the Dutch Central Bank or Bundesbank in isolation, and then you have regulators also doing their thing. It's really, we are sitting in the same boat, and to further bring token economy to a success, we need, all of us, we need to collaborate and to think how to build this infrastructure and to make it really interoperable.
And I fully agree, and I think the goal should be to collaborate, but we should work towards innovation, because if you look about tokenized economy, what it will bring, now you have a lot of things like you pay once a month to Netflix because you want to have as limited payment moments as possible, because a payment costs money. What if you don't have any money involved, any cost involved making a payment? Then you can have all kinds of innovation, like pay for use, that you in your cab and you pay just so far you can only watch one movie. Or you can pay real-time taxes, which your tax authority would really like. Those kinds of innovation being developed in decentralized finance are being developed right now. We should really make that happen. So not create the same system but then autonomous, but make that one step forward and really move, not in between. So not wait for it, but go for it. So not move first to permissioned, but go right to the end goal, get everybody together and work on that.
Properly go permissionless.
Yep.
But what occurs to me as we are discussing strategic autonomy is that we're in a good place, because all of you create assets, digital assets, new generation of assets that the entire world wants. World wants European assets. And what is the success of America right now? Well, we want their assets. We want their digital assets, we want their crypto, we want their stable coins. Bring this on. And I think with initiatives like you're leading, the world will also in turn be interested in European assets, and being able to distribute them towards other nations means having a seat at the table when the strategic autonomy is discussed. So it's great efforts that you're pushing within the key European institutions and within the European central banks. And I'm really personally glad to see that public and permissionless space is understood more and more now, and the game is not lost for that space. So
I'd like to add something to that. So I fully subscribe to what's been said, and we need to collaborate more and more quickly to achieve also that strategic autonomy in Europe. And what's an important element there as well, that didn't always happen like that in the past, is that it needs to be set up in a cooperative way. So we talk about the infrastructure part still, right? So the settlement layer and the settlement instrument. And on top of that, indeed, all the value-added products and all the innovations can happen. But below that, you need to make sure the infrastructure is fully trusted. And how do you do that? By making sure that there's not one single or few individual parties there creating a monopoly for themselves, like you see with the big techs from the US, for example.
Exactly.
And I think Europe is very good at that, to set up such a cooperative model. And in that way, you ensure that many parties feel comfortable to link themselves to that platform without making somebody very, very rich, right? That's not the way we typically do it. So the trust, that's the key element of the trust that we need.
Absolutely. I think the world understands that unless we collaborate, it's the race to the bottom. And we cannot afford anymore the race to the bottom. Look at the widening inequality gap, look at the deteriorating resources in the planet. So I think more and more world understands what Europe brings to the table, which is this orchestration of collaboration. And collaboration in the space of digital assets is really critical for us to not only achieve strategic autonomy, but also help the world become a better place by working together.
Yeah. And I think it's also important to get the message to do it. And I guess the biggest risk is at the moment we have a financial infrastructure which is fully working. And the biggest risk looking at disruptive power of technology is leaning back, doing nothing, saying we are in an environment which works. I guess in the past we've had so many incidences. Yesterday we discussed, for example, Nokia, once a European leading company in the mobile space. And they actually got smartphones from a strategic perspective completely wrong. And within a couple of years, these guys were gone. I guess in financial markets, your regulation obviously plays a key role. We are more regulated than the pure tech space, but it's important to get this sense of urgency to further collaborate and work together of evolving the digital journey we are on, and this includes AI. This includes blockchain technology, this includes data management, and that's really the big package where we have to assure that Europe remains competitive in the medium to long-term future.